Good morning, traders, and happy Friday. It's 8:01 a.m. Chicago time on the 11th of December 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight news, there are some key things going on. EIA monthly report maintains that 2016 global production is going to be at 31.3 million barrels per day, putting a ton of pressure on crude oil. Crude oil has pushed down into the $36 handle. The low is 36.12. 36.12. It's currently down 1.65%, or 1.2% actually. It is trading at 2008 levels right after the crash. Just looking really bad over there. Markets will remain oversupplied at least until 2016. The plan, there's evidence that the plan by Saudi Arabia is working. Non-OPEC production growth in production has basically slowed to a trickle to about 0.3 million barrels per day from 2.2 million barrels per day just a few months ago. So any non-OPEC, basically all the U.S. producers and so on, are just getting absolutely creamed. The U.S.-Canadian pair, the loonie, hits fresh 11-year lows on weaker crude oil prices. Trading falls beyond 1.367. Basically, the Canadian dollar has dropped approximately 30 to 35% in the last year and a half or so. Very, very big move there on that currency. It's essentially, sadly, for Canadians earning in Canadian dollar and having to spend it overseas, this is like hyperinflation. Their money is buying 30% less against U.S., British, and European markets. The Dow announced today that it and DuPont agreed on a merger for $130 billion, all-stock combination. The new company to pursue separation to three independent companies. This is a huge, huge merger, $130 billion. And then at 7:30, about a half hour ago, we got November PPI final demand, came in at 0.3, slightly better than 0.0%, negative 1.1% versus negative 1.4 year on year. So that's pretty good. November advanced retail sales came in at 0.2 versus 0.3, so a slight miss there. Retail sales ex autos 0.4 versus 0.3, slightly better. Other than that, looking at today's calendar, we have University of Michigan confidence prelim, expecting 92. That comes out at 9 o'clock Central, 10 Eastern, 92. This number is a mover. It's a medium tier number. We're also getting business inventories, expecting 0.1 business inventories for October. Again, 0.1. And then, of course, at noon, we get Baker Hughes rig count. That number is a lot less significant now. It comes every week. We don't have an estimate for that. As far as speakers, we're looking for Bank of England Speaker Whale at 9:35 Central, 10:35 Eastern. And that is it for today. Pretty quiet calendar today ahead of us. Let's take a look at what we've done. So yesterday, the main trade idea yesterday was for the market to test up till this LVN here. But overall, I was looking for a test of the LVN, rotation, and then push down into the close. Again, for those who attended yesterday's Trader Bite would have seen this. Push into yesterday's close and then test this 31.75 to 34 area which is the point of control. The overall expectation, though, for yesterday was for it to chop around, make an attempt higher, and then ultimately take out this 2650 low. Again, I'm quoting March. The contract I'm on right now is the March contract. I was done with December yesterday. Today, the volume and everything else starts to come into line. So going forward, really you should be trading March, where the liquidity and the volume will be. December will be basically a negative migration of open interest to March going forward through to the expiration next Friday. So this was Hypo 1 here. And it looked really good. We got some responsive selling on the open, but then we pushed up, and I was stalking the area. I was looking for this area at 45.50. Gave a really nice rotation down, and it looked like it was going to retest this. Let me expand this chart so you can see the open and how those trades laid out. Things were looking good there for a while. Oh, too far. So we pushed into this 45.50, the just 3 ticks of heat to 46 and a quarter, and then it rotated from 46 and a quarter to 37, 9 points pretty much. And then if you miss that, then it gave you a chance at the mid, a push into the mid, lots of resistance there. And then it rotated down, retested the mid, was a shot across the bow for shorts, and then it finally took out its opening swing low by 1 tick. Once we 1 ticked the opening swing low, we had a very strong push up, and that's what's called a failed auction. Yesterday was a perfect example of a failed auction. The market made all of the effort to get down beneath the opening swing low, and was only able to generate, after all this effort, it was only able to generate 1 tick, a 1 tick test or a 1 tick probe below before it found buyers pushing the other way. So let me expand this a little bit. Before it found buyers pushing the other way, and then once it broke the IB high, I don't know if I posted on Twitter or in the chat room that the probability of another neutral day, in other words, once it broke the initial balance high right here, the probability of taking out this this low, the 20, 35, 75 in a session, were extremely low. I did look for it to still rotate down again, and it did. Not an easy. For the last week and a half to 2 weeks, actually it's about 2 weeks, we see higher time frames in operation here. We see an intermediate to higher time frame OTF, and we see them pushing in both directions. So it is not normal for this product to have 10-point rotations, 8-point rotations, 7-point rotations. Those are considered excess rotations, and we look for failure on a retest on those rotations. But lately, this thing will drop from 58.75 to 46.5 in a matter of 15 minutes. That's 15 points in 15 minutes. That's quite a bit for this product. So that's a strong indication that we do have a higher time frame participating here. And there are a lot of reasons for a higher time frame to participate. There are quite a few things changing fundamentally, macroeconomically, as I talked about earlier this week, and you can see that in the pricing of commodities. It's very tough for the global economy to have commodities just dumping and for it to have sustained growth. Some people might think, well, crude oil at $36 makes things cheap to produce. Yeah, but if production did not increase dramatically from where we were at $68 a barrel, then if supply is the same basically, then demand must have dropped for prices to drop. Basic economics 101. Supply demand curve, right? And so if if price is dropping, demand is dropping, and if demand is dropping, how is that affecting manufacturing? How is it affecting the need for energy, the need for iron? I look at a chart of iron, what iron looks like nowadays, copper. These are all indications that there's a massive undercurrent of the market slowing down. Indices have not caught up. Indices are still looking at next week's Fed and going, are they going to raise or are they not? Are they going to raise or are they not? And I can tell you I'm going to stick with the same concept I've talked about for the last 3 years. They are not going to raise. I do not expect them to raise. And I would love for that to be a surprise. I would love for them to come out and actually raise rates. That would create some great trading opportunities, especially in the treasuries, but they're not they don't have the room to raise yet. We're going to be stuck with these interest rates for quite some time in my opinion. But then again, I'm not a highly paid analyst at a major investment firm. I'm just a day trader. But this is how things are shaping up. But I do see some strong arguments, and I'm not a perma bear. I do see some strong arguments that the market's likely to pull back. And I think we're in the process of doing that. So we pushed up to 58.75 yesterday, and then we finished inside of the IB. The strongest rotation of the day was a down rotation right here. And then this was the continuation move. The continuation move did not complete itself because it ran out of time. You can see it consolidating here. So if I put up a profile of what this looked like at the end of the day, you can see that this was basically, if you viewed this as a full day profile, this was a trend down profile with a weak low. And so the highest probability play into the close and into the next session is for a lower low, just like we see with a full day profile that is trending down. We do have a weak low here, and we have it being thin and then accumulating here with the point of control at the low end of the range. So the expectation is that energy is likely to dissipate lower, and boy, did it dissipate lower. This the overnight session. The overnight session had its pullback. So here's the overnight profile. This was yesterday's day session right here, and the overnight session had its pullback, very normal. So the mid of this session, the mid of this drop was right where the overnight high was, and then once Europe kicked in, it just tanked, and we have a low of 20.50. So we've taken out that prior low that we had at 27, and have pushed through. What I've also noticed is that my hypotheses have been off for the last week or so. I've been hitting maybe 1 out of 5 or something, when normally the primary hypothesis is much higher than that. It's 3 of 5, 4 of 5 on some weeks. But what I'm also noticing is that the hypothesis actually works out. So today's hypothesis doesn't work out for today, it works out for the following day. So after yesterday's trading, so we look at this as a pullback. The expectation is it'll pull back to the LVN here and then rotate down and take out the low. That didn't happen yesterday at all, but it happened overnight. We're getting that move right now. The same thing happened the other day with what I expected to see as a rotation back through, and once it took out this LVN back here on Friday, then it's likely to push lower and retest this low, and that didn't happen until this day here. It's very odd. The market is changing, and I recognize this. Trading has not been as straightforward as it has been when we're looking at the auction, but that's normal. In my 15-year career, almost 16 years of doing this, we go through these transitions where I have to I recognize, and this is where journaling and keeping track of what's going on is very important. I recognize that there's a slight change in participation, the rotation changes, and the way we auction prior levels changes. And so what you do is you observe what happens over the next week or two or three, and figure out, is it the time of year? Is there some event that's causing this, or is this just new behavior by the market? And then you adapt and you change how the hypotheses are created. So I've had to do that probably once every 3 years or so, and we may be in for that now, but we'll see. We'll see how things play out with next week's FOMC. Everybody, there was a they were pricing in a 70% probability of raising rates, of raising rates once the ECB came out last week. So we'll see what they do. Chances are they're not going to do a thing. So it's just going to be a bunch of talk. So this morning we're looking at after yesterday's trading. Yesterday's profile is fairly balanced. It was skewed to the downside. It rejected both attempts higher. The market found it pushed very hard. So you can see here this very big bar, big green bar, some pretty good delta with it, and then we have this also very big, unusually large green bar again on the 15-minute with some pretty good delta behind it. And then overall, the market, as soon as it is done, as soon as that participant's done, they just whack it down. It's like whack-a-mole. We see it. We saw that back here. We saw that back here. We saw that back here. It's the same play over and over and over. We finished with it on Monday, and then the very next couple of bars had that same thing. So we see the same thing on the downside. We have a strong push into the low, and then we drift up. We push up into the close. Strong push into the low. We drift up into the close, and so on and so forth. We just keep drifting up into the close. These are two opposing forces at a higher time frame that are taking advantage of pricing as it pushes down. They're on the buy side, and as prices push up, they're on the short side. So what that causes is it causes our delta to be very out of whack with the type of movement we have. When we have a rotation this big, the delta generally drops 50 to 60,000 contracts and puts us in the negative 40 to 50,000 by the end of the day, and we only have about negative 30,000 here. We see participation on the upside, yet it's unable to breach 30,000 on the delta. So it tells me that both sides are kind of whacking each other, and we are the small fish in the middle. And our goal is not to get overrun when that happens. It's just when the higher participation. When the higher time frame participants are in here, you have to start looking. You have to start exercising caution because we don't have we don't have the account size to participate with them. So, but it does create opportunity. It does create a push and a follow up in general, and that's something we can do something with. We can trade. Okay, so here we are again, still dumping. The market is definitely trending down overnight. There's the overnight inventory is short. We have some pretty strong participation on the downside. There was a pretty good bounce here in delta, not so much in price, and the delta is continuing lower. We've pushed through several really important levels. Levels here, namely the 2020 in the current contract, which was about the 2027 in the prior contract, and it's looking fairly bearish. So this morning, where I would normally expect that since we're gapping down, I would expect some responsive buying participation. The way this is behaving right now, and it's 8:20, so 10 minutes to the open. The way this is behaving right now, I am keeping my hands. I'm keeping my hands away from the mouse and away from the market early on. I do not expect too much strength on the buy side. This looks like a dumping day. So you can see the level of participation here is very, very high. This is not a good day to fade these big moves. It's a good day to find a move up to sell, in my opinion. So my primary hypothesis is that it's likely a continuation trade lower. We do have impulsive movement. Here's another impulse taking place, and I expect this to continue lower. So look out below on our big profile. So let's look at that. On our big profile here, this big red profile, we have migrated now to the low end of the profile. So this was a key area right here at 2020 that we pushed through. We're trading 2014 currently. We have pushed through this next area. This is very ominous. This is pretty ugly for the buyers as we fall out of this profile right now. We have moved. We have pushed back up to the point of control, which was up here in the 72 area. We have chopped around it. We have dropped through it, retested it, came back, retested it again right here, retested it again right here. Right here and right here, and we are failing away from it. The expectation is that this is a continuation move, and the low of 2006.75 in the March contract is now in jeopardy. And we're starting to move through the greater profile. So be careful today if you're intending to get long. This movement here is very deliberate, and it does mean business. So 2006, 2005, or 2004 actually down here, this LVN is the next area of interest, and it's likely to be taken out today. I need to step aside today and figure out which participants are going to be involved. Does a buyer come in and see these prices as great prices to get long, like they've done here, cheap prices, let's get them. And if they do, then I'm looking for a retest of the last low in the area at 2026.50 from 2015. If we break above, then we start to look at yesterday's low. We start to look at what we've done. First we look for the VPOC, then we look at the yesterday's low, and then that's likely to be the range for the day on the upside. But the most likely play is a very whippy open, an attempt at some point at 2020, tag at 2020, and a rotation down to 2006.75 and 2004. That's the higher probability play. I expect this to be a continuation play because the gap is too large. Statistically, the gap is too large for us to move back into yesterday's range, but still, we might see a test up from the responsive buyers at this point, those who are seeking value purchases at this point. I'll let you go. I know it's a long one, 5 minutes to the open. Good luck today. It is Friday. Do not bet too much on Friday. Do not take this with you on the weekend. And today is likely to be a pretty active day from the shape of what the overnight session has done so far. Good luck.